I teach you how to take the money you have right now and hold on to it, invest it, maximize it. Hi guys, welcome back to my channel. Today I'll talk about a few different ways on how to maximize your income and cut down on your spending so that you can reach your financial goals. I'll do a deeper dive on how to cut back on your expenses and how to basically live below your means and how you can maximize your income by utilizing investments. So first up today, what I wanted to briefly talk about is real estate investments, right? A lot of us understand that real estate investment basically means that you're buying a property, maybe renovating it, and then flipping it. So one of the easiest ways that you can actually get into real estate investment without having to purchase property is through real estate investment equity stocks, right? That you can maximize your income by investing in real estate is buying real estate investment trusts. And REIT is basically what this is called. And it's like buying stocks. And it's basically a real estate LLC or a company that buys properties, and you're basically putting money into their trust and you'll watch your money grow. This is another way that you can get into real estate investment without actually having to purchase property yourself. And what these real estate investment trusts do is they basically pool money from different investors such as yourself, and they'll use that money to buy specific properties to either flip them or sell them or rent them out. In whichever method that company is structured to buy the properties and to basically quadruple or multiply their funds is the process that they will follow. All you have to do is pretty much buy a REIT or a real estate investment trust, but what you can do is purchase them on E-Trade, Ameritrade, Charles Schwab, Fidelity, wherever your holdings account or your portfolio is. I think this is one of the easiest and quickest way to start your real estate investment journey. This is how I started at a very young age. When I started investing, I made sure to purchase a lot of real estate investment trusts and a lot of ETFs to maximize my portfolio. And then from there, you can start pulling different ideas and brainstorming on how you can maximize your income through real estate investments, either through purchasing property or through rental income. So my number one suggestion is REITs, but then also to kind of give you like a double whammy is wholesale real estate investment, right? And I'll do a really brief description on what that is in this video, and if you are interested in learning more, just let me know and I can do another video about it. So wholesale real estate investment is pretty nifty, but it does require a little bit of legwork, right? And what that means is it will require for you to actually find properties with motivated sellers, which are basically homeowners who are interested in selling their homes quickly with cash. And your job is to basically find investors that have the cash that will purchase this property from these homeowners at a rate that is probably below market value, because you don't have to go through the banks and all of the paperwork of obtaining a mortgage loan. And that's why the prices will probably be below value. And that's why you find motivated sellers, individuals who are interested in immediately selling their homes, right? And so from there, you basically get what's kind of called a finder's fee or like a cut. It can be $10,000, $5,000, $2,000. It really depends on what the terms of your contract, but it's actually one of the quickest ways to buy property and to pretty much sell it immediately, although you're not technically buying it, but you're connecting these two people together and you're receiving your cut for that connection. It required a lot of legwork out of me that I truly could not give it. But I do think that if you have the time and dedication to find your leads, find your comps, and to find investors, which there are plenty of people who are willing to invest in real estate because they don't have the time to look for the homes and to find these motivated sellers and to work out the deals. And there are people online that actually teach you how to mitigate these sales and how to actually close these deals. But I think it's another great way, in addition to real estate investment trusts, to start maximizing your income in the real estate sector without having to purchase property. So my second recommendation, how to maximize your income and how to save for retirement, obviously I talked about this previously, is a 401k. Most of us work, most of us have benefits, and even if your employer is contributing something so low as 3%, I have seen employers that only put in 3% for their employees. I say still take it, right? It's better than nothing. What a 401k basically is you're dumping a certain percentage of your salary into a pool, and your employer is also dumping money into this pool, depending on the percentage that they allow within their policy. Those funds that are being contributed by you and your employer are pretty much buying stocks, right? You're pretty much buying stocks and bonds. And a 401k is just a fancy word for saying that you're buying into the market through your money, through your salary, and through your employer's contributions. It's actually a really great way to maximize your income. Some employers do offer pensions, which if you are interested in having a pension, I definitely recommend doing more research on that. A pension is basically the same thing as like a savings that your employer puts to the side for you for retirement. You have to be with your employer for 5 years or 10 years or 7 years, depending on what their policy is, in order for you to become vested. With a 401k, you're vested a lot quicker because you're actually just buying into the market. And 401k is variable interest, right? So you're buying into stocks and bonds. So depending on the market, you can literally lose money or you can make money. The pension is guaranteed because the pension is not buying into the market. It's guaranteed income that your employer and you are putting to the side, right? And saving, and there is a growth, I believe there is a growth amount for it, but in my honest opinion, a 401k is a lot better, especially if you don't plan on staying with the employer for a very long time. Like I've always stated, most employers just offer a 401k and they probably will give you the minimum at like 2 or 3%. And I believe the maximum that they can provide by law is 7 to 8% to match you. And I always say dump as much as you can. Right now, the market is fluctuating due to the economy, as we all know. So my 401k has dipped by about 26%, but it's still really strong and healthy, and it's growing with the market. If you are employed and your employer offers a 401k, always take that option based on your specific needs. So third up, I wanted to talk about living below your means and what this means to me and how I've utilized it. When I was in college, one of my professors taught us that after college, you still live like you're a student until you meet your financial goals. So we'll say it again. When you graduate college, you have to make sure that you still live like a student, even within your career. And I'm a firm believer in like, this will change your life, because I learned that when I was about 22, 23. And here we are several years later, I still live that way. However, I've upgraded my life, obviously. And I truly live by that. So what that means is, no, you're not literally living like a college student, but you're cutting back on costs. You're not, until you reach your financial goal. Everyone has a different goal. My goal and your goal will be completely different, right? So depending on whatever goal you're trying to hit, and if you keep trying to save that money, trying to buy that car, if you keep trying to buy that house, but you still don't have enough for the down payment, obviously there are issues within your money management skills that need to be addressed, right? So if you are having a problem meeting specific financial goals, this page and this video is for you. Because I teach you how to take the money you have right now and hold on to it, invest it, maximize it, so that you can reach your financial goals. Like I said, it might be to pay off your student loans. It might be to purchase your first home. It might be to buy your first car. Regardless of what your financial goal is, living below your means and monthly reconciliations is what I'll address. So let's talk about living below your means. Rent right now is extremely ridiculous. I totally understand that. So let's say I live in Atlanta. right? Let's say I live in Atlanta and I make $75,000, $80,000 a year. I'm using a very popular city that a lot of people move to. So let's say you live in Atlanta, you make $75,000 to $80,000 a year before taxes. After taxes, it's Georgia, so you're probably like at 50 or 60. Don't quote me on these numbers. I usually go to ADP paycheck calculator, go to the specific state, and then calculate your paycheck. That's the best way how you can figure out where you belong in the pay rate, depending on the state that you live in or plan on to move in or plan on moving to. Let's say you do that. You do not need to go get a $2,500, $3,000 apartment. First of all, you live in Atlanta. You don't live in New York or California where you have to pay that much money. I'm saying this because there are people who actually live in like extravagant homes in Atlanta that they rent out for a ridiculous amount of money, where they may even have to kind of lie about their income just so they can live like that. That is not necessary. That is how you end up evicted. That is how you end up breaking your lease and moving out when you start living. One of the best things Obama, I think, said was live below your means, live within your budgets. If I'm making $5,000 a month, I'm probably going to look at apartments that are $1,200 to $1,400, $1,500 max. I mean, $1,500 is max. Rent should be a maximum of 30% of your income. Your rent should be a maximum of 30% of your income. Do not sacrifice your safety for aesthetics and amenities, by the way. Safety is important. I personally believe that you should live in the best neighborhoods that money can buy you, in maybe like a not so fancy apartment building that maybe doesn't have all of the amenities, right? So let's say again, in this hypothetical scenario, we are in Atlanta, somewhere that is extremely popular right now for cost of living reasons. You do not need to pay $2,500, $3,000. That's equivalent to California, New York, Chicago, Miami. So you want to live within that budget where you can still find something really nice with the amenities within that budget. And that's one of my examples of how you can live below your means. Another example is shopping. I mean, people shop all the time. You can bargain shop. There are lots of sales. You can shop online. Nowadays, we have Fashion Nova, we have Shein, we have Pretty Little Thing. For women, for men, they have Fashion Nova Men. I mean, it's limitless the amount of bargain shopping we can do. You do not need the newest Telfar. You do not need the newest Marc Jacobs. You do not need the newest Louis Vuitton if you are not there. See, the problem is we're trying to keep up with celebrities, but we don't have celebrity income. You want celebrity things, but you don't have celebrity income. You want celebrity status, but you don't have celebrity income, right? So again, if you're bringing in celebrity income where whatever you bought, you could buy it 2, 3, 4, 5 times, and even for your family and friends, then hey, you are exactly where you need to be. Please keep buying. I'm a firm believer in that. Am I saying that I do not own, a Balenciaga, item, or a Chanel or a Louis? Of course I do. I bought it based on my budgeting, right? So I don't consistently buy these things. I bought one of each because that's all I need, to be honest with you. I don't need any more. And then I move on from it. I truly believe that when you go shopping, if you really cut costs, spend more money on the food you eat. Spend more money on organic, whole foods from farmers markets. Spend more money on what you put inside of your body, because that's what will give you a higher rate of investment. I believe that everything you do should have ROI, from the people that you associate with, the work that you do, the food that you eat, the clothes that you buy, the things you invest in. I believe that everything you do should have a ROI, or else it's a liability. And one of the best methods that I use to maximize my current income without, you don't have to start a business, you don't have to go buy stocks or crypto, none of that. It's monthly reconciliations, right? So we're living below our means, we're cutting back on costs. So now, how do we identify where our money is going? This is called monthly reconciliations. I love this, I live for this. I'm also a revenue manager. have a revenue management company where I manage over 20 to 30 million dollars a month for physicians and hospitals. So revenue management and reconciliations is my love language, and I do it every month from my own bank account. So very simple. What you want to do is extract your monthly statements from your bank account onto an Excel spreadsheet. I would love to show how to actually do this step by step because I know everyone's not as Excel savvy. If you want to see, if you'd like to see a video on how monthly reconciliations are done through pivot tables in Excel, I would love to show people how to do that. So just comment or like and subscribe, and I'll be sure to follow up. Extract your statements, create a pivot table, and you can categorize where everything went. How much cash should I take out, right? How many debit card transactions were there? How many credits? How much money came in? You need to know. See, we know how much we make, but we don't know how much we put out, right? And one thing that I always say is if you're not making money every day, you should not be spending money every day. A lot of people have to wait 2 weeks, 1 week, sometimes a month to receive their payments. And even if you have a business, you might have a business that requires you to invoice your clients, and now you're not getting paid for 30 days. So this is independent of running a business or working for someone. Unless you have an e-commerce business or like a store, a brick and mortar that's open like a clothing store, you will not receive money every day. And even then you have to wait a couple of days until the transactions process through your clearinghouse, right? Monthly reconciliations. Extract your monthly statements, create pivot tables, categorize where all your money is going, and figure out where the most of your money goes and cut that cost. I guarantee you for 6 months, if you reconcile your expenses, you will start seeing like, wow, in January I was spending $500 at eating out or on Amazon, and now it's September and I'm only spending $200. That shows that you were able to save $300 because you understood that, hey, I'm actually overspending on these things. The only way that you'll know that you're overspending is by reviewing every line item to make sure things check off. And I have Chase Bank, so whenever I open the app, I have a snapshot of my day and the month of all my expenses, and I use that snapshot to also configure this data on a monthly basis. So to wrap it up, 3 different methods on how to maximize your income. Number 1 is real estate investment trusts that you can buy, which are pretty much stocks that you're buying through real estate companies while they're purchasing all the properties. You're basically enjoying the dividends on those and the returns. And second, I would like to also loop in with that is wholesale real estate investment. You can easily find motivated sellers, find investors connected to, and receive a percentage on that. Number 2 is if you are employed with an employer that offers benefits, definitely utilize a 401k and contribute as much as you possibly can into that, because remember, a 401k basically means that you're buying stocks and bonds with a percentage of your salary along with your employer's assistance. So there's this pool of money that's going into the market. So there are variable returns, but the returns are great from my personal experience, regardless of how the market fluctuates. And number 3, of course, another double whammy, live below your means, cut back on costs, whether it's shopping, whether it's living expenses, and in loop with that, make sure that you're doing monthly reconciliations. What that means is you're reconciling your monthly expenses, what goes in, what comes out, how much did Amazon take, how much did you eat out. When you reconcile your expenses, you will definitely see where your money is going, and from there, start budgeting, start cutting costs. Thank you for watching, and come back next time. Make sure that you subscribe, like, and share, and I hope that you found this video informational. Bye.